Hi everyone, welcome back to Be Rich. This is me, Vinod, recording from Bangalore today. I'll be recording from Bangalore for the rest of the week, so I'm sorry if the audio quality and the video quality ain't to spec, but I'm trying to do my best and give you some videos and some content out there, even though I'm traveling. Today, I want to talk about the scheme which has come out from the government, known as a Product Linked Incentive Scheme 2.0 for the steel sector. We already have an existing product linked incentive scheme called 1.0, which is announced previously. This is 2.0, which is an upgrade on the 1.0. And why is the government doing this? It wants to support raw material supply and promote the use of scrap metal in India. And that's why the Ministry of State for Steel has been proposing this. Despite the recovery of steel production in India from consumption post pandemic, which is up 14% year on year, crude steel production in India is at 94 million tons, and it's seen a 14% jump in finished steel consumption to 69 million tons from April to November of 2023. But there has been growing concern in India about the import and high raw material prices that persist and the geopolitical uncertainties which are there. The Chinese steel is being dumped into India through various means, not directly, but through other ports and other ways. It's been reaching Indian shores, which has been hurting the Indian steel sector for some time. But the Indian Steel Association has been requesting the government to do something about it, and the government seems to be finally waking up to this. So, what the government is doing is it's set a target of reaching steel manufacturing capacity of 300 million tons by 2030. And to reach that, it requires a lot of work because the current steel capacity in India is 161 million tons. So, government has been trying to encourage new technologies to boost output and also to keep in mind about reduction of carbon emissions because steel does produce a lot of carbon and greenhouse gases, so they're trying to work on that. And of course, a new push of AI technology and how AI can help steel sector and improve production of steel is also being investigated. The Indian Steel Association has been highlighting issues which they've been facing, which is the surging imports and the high raw material cost, especially of dumping steel from Vietnam and China. India has been also relying on import of 90% of its coal, which is needed for steel production because it's the main fuel for steel production, which is also goes back to circling back to greenhouse gases. And they're trying to see how to change these production lines in India to make it more carbon neutral. So the currently about 70 to 80 million tons is being used, coal is being used by the steel sector in India. So the steel production projected to be around 123 to 127 million tons for the year 2024, and also managing the challenges of import from Vietnam and China, as I said. So, what does this mean as investors in India, as long term investors? Since there is a push for this kind of schemes in India, Indian steel sector companies, the Indian steel industry as a whole, should see some incentivization and some maybe tax breaks and some kind of pricing in help, and the duties being levied on Vietnamese and Chinese steel might be higher, so it makes Indian steel at least domestically more competitive and affordable. And also, of course, using scrap metal is going to reduce the overall cost of the input cost of steel within India. Okay, so why did I talk about this today? Well, this is how the news can be read when you look at something as a long term investor. This is something which is interesting and something for you to keep an eye on in the coming months and years ahead to see how the steel sector is doing overall and to see if it's something that you should be investing into. Now, if you look into this and you jump into something like Tata Steel, for example, and if you look at the PE ratio of Tata Steel, now it's Tata Steel is trading at 154 rupees share. That is the current price of Tata and Steel. And the PE ratio of Tata Steel has shot up to 99.2. This is mainly on the back of what's been happening with the news about Tata and Sons and the prospect of Tata and Sons IPO and the possible IPO of Tata and Sons and the shares which are sitting in Tata Steel of Tata and Sons. So this has led to this sudden increase of Tata and Sons. I mean, Tata Steel share prices. In January, it was trading at a PE of 18 and the EPS was at 6.4, and the earnings has dropped down to around 1.58 and the PE ratio is now at 99. Post the speculation bubble which has happened in all the Tata Group companies due to the Tata Sons IPO speculation, you will see a correction in Tata and Steel. At that point of time, Tata and steel prices, when they do correct, maybe it will be a buying opportunity looking at the headwinds of the steel industry, as I had stated. So, this is the way you can look at the news, this is the way you can read it and analyze it. But do keep in mind I don't want you to see short-term market trends. I don't want you to look at what's happening in the Indian industries over a 12-month, 18-month period. I'm looking at you to invest in the stock market for a much longer term, at least 5 years to 10 years minimum. If you're looking at the short-term markets, I'm not the person, or Anand is not the person you should be relying on for information. We do not advise in investing in short-term market trends and looking at short-term gains. We rather emphasize the importance of asset allocation for the long term. And we are averse to risk in the short term, and we do not want to invest for short term. And we do not look at market momentums and stock momentums and share momentums in the short term and invest in momentum stocks. We try and avoid those things. So, that being said, there has been a huge interest in mid cap and small cap stocks in India, and currently looking overvalued. So, if you're looking at entry right now, large cap stocks are something which you can look at, and maybe you can look at companies in that sector in large cap, because there seems to be a lot of growth prospects in large cap, specifically in IT and chemicals, showing great potential for entry right now in the current 6 to 9 months. And if you do look at India's macroeconomic conditions, we have a strong positive growth potential in India right now. The way we are positioned, not only in terms of talent pool, we have a very strong talent pool, and we have also a large access to capital. That means capital is there, workforce is there, and there's also interest by the government and the private sector to invest rapidly in infrastructure development within India. So if you compare all three things together and you put it together with also regulatory action being pushed and in inclusion of Indian bond in global indexes, it is a great time to be investing into India. Forget looking at Japan and looking abroad. If you are a nascent investor and you're starting small, India is a great option to start investing right now. So I would like you to keep that in mind and keep your options in India open and study the markets in India, especially the sectors and the companies which I mentioned previously. And some of them are great bargain entry points right now, looking at the future potential of Indian economy and Indian earning capacity. Even if we discount global headwinds and global macroeconomic conditions within within Indian borders itself, there's tremendous potentials for growth. So I hope you found this video informative and entertaining. Do let me know what else you'd like me to talk about. I'll try and cover those topics in the comments below. Do put them in. My team does look at it and review them. Thanks for watching the video, guys, and I'll see you in the next one soon. Bye.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.